Hello everybody, welcome back. A bit of a late morning here. It's my kids wanted to walk to school and nursery, and I'm a bit under the weather, got some kind of cold going on. I smashed my hand up a few days ago as well, so I don't know how I don't know how I'm gonna get through the next 5 minutes. I just obviously have done the opposite of lottery tickets here. I've got the worst luck ever this week, but hopefully that will change today as we're looking at a lot of stuff going on, FOMC, CPI, and a host of other things that's going to affect price action regardless of whatever the charts suggest. So looking at this, first of all being the Dixie has broken out from this giant descending triangle, which is pretty bullish to be honest with you. We're above all moving averages. We moved up to the top of the Bollinger Band. We're starting to pull back a tiny little bit today. Now, before we start with all of this, I think, and again this is just thinking, this isn't too much other than thoughts, I think CPI will be lower than it was last month. Right? The reason I say that is almost always to do with oil. And yeah, oil is creeping back up again over this last week, but that, the CPI that will be printed today, or shown to us today, is a lagging figure, and it won't account for these last 1, 2, 3, 4, 5, 6 days of basically continuous green candles. It will take into account, if anything, the majority of the downside, which has been about 18% from the top to the bottom of oil. And oil is CPI as far as I'm concerned. Oil is fuel, fuel is food, fuel, everything, lights, energy, the lot. Fuel gets added to the price of everything, which increases the price, which is inflation. There's a lot more to it than that. It's an oversimplified way of looking at it, which is why I'm saying think rather than know. Nobody knows. I think. And that's what I think is going to happen. So I think we're going to have a lower than last month's CPI. And whether the Fed get it right, whether they've, this is what we expect to see. We forecast inflation rate year on year, or blah, blah, blah. I don't know if they got it right. They got it right last time, so well done to them. Whether they get it right or not, I don't know. But I just think it will be lower than last month's, which means we should see some form of upside in the market. But with any kind of sort of news like this, volatility is to be expected. So it'll be up, it'll be down, it'll be all over the place. The only place it's not going to go is to the left, which is, well, these days, who knows? It could even do that. It's a joke, obviously. Right, so let's have a look at... so that's your Dixie. I think there's a good chance that the Dixie will continue with this, but not without a bit of a pullback, especially with the CPI print. So we might be looking at a pullback down to 104.7, and that's fine if that does that. So let's have a look at what happened yesterday with Bitcoin and stuff. So we're starting with the weekly, because the weeklies are what we're most interested in right now. Weekly, Bitcoin 10 exponential moving average support and small bounce. Ethereum, weekly 10 exponential bounce. Fair enough. Okay, fair enough. We'll give it the benefit of the doubt. There is something going on around these levels. And if you're in it for the long haul, any area on a bullish chart like this is a buy the dip, and that would be the first stop. Next one would be the 20, then the 21, bringing us for Ethereum down to 3,200, more or less where we kind of started from, really. And for Bitcoin, it would be down into 63,000 towards 61,000. So look, that's the weekly buy the dips, okay, for those investors that want to buy and hold for the duration of this cycle. If it breaks down, it breaks down. But these are uptrending moving averages used as support. We saw a very decent reaction on the 21 exponential the last time we dumped into it. Big bounce up to the major resistance. So this is nothing more than a bounce, a higher low, and potentially a potential area for reversal depending on what happens today. And I'm not putting that much weight on what happens today. I know that today will cause price action to go either up or down, in response to the read. But this is still an uptrend, as is this. There are lots of altcoins out there that are not in uptrends, and we were looking at these on the live stream last night. Patreon, if you want to join, links in the description. Some were looking good, some were looking bad, some were looking meh. So there is not really any way to determine whether the altcoin market is going to completely rally unless it just follows the market, which it often does. And the leaders are still Bitcoin and Ethereum because they've got some pretty good looking charts there. If we look over at the Bitcoin dominance chart, we're still battling with this area here, this 56% dominance. If we zoom out, take it to a weekly, my expectation is that we will eventually find our way up to 58 at least. and if we break that, it's 64, and that's where major alt seasons should take place. Now, it doesn't mean that alts can't make money, but huge parabolic continuous alt season, the alt seasons that we used to be, well, I say used to be, that we've managed to play a few times in each cycle, you know, this being one of them. We had a nice time there, this one being a really good one. Whoa, epic stuff. And we played a few alt seasons around here, but nothing to the same extent as these. You're going to get something like this, you know, bang or bang when you reach this level or this level. So alt season of dramatic proportion will happen at a later date. You know, maybe next year, to be honest with you. But that doesn't mean that buying incrementally into altcoins is a bad idea. I've been one for suggesting dollar cost averaging should have started last week, and for me it did, and it will continue to be a strategy I'm going to employ the lower we go from here, because I do believe in the altcoin market mostly, and I do believe in buying low and selling high, which means that when we go down, opportunities are presented, and when they go up, opportunities complete, and you sell them. And at the moment we're going down, so it is really about buying and recognising that we don't know where the lows are going to be, which is why we shave off some of that beautiful tether, pounds, dollars, euros, yens, whatever it is that you're holding, and swap them for some random crypto stuff that has, whether depending on what mind frame you wake up in the morning, loads of value or no value at all. We don't know, do we really? But long story short, you know, if we actually just look at what we're seeing here right now, we're seeing a big bold move up. Ethereum consolidation 1, 2, 3 in a row. First major opportunity on the weekly. Same thing with Bitcoin. We moved up into the resistance. First major opportunity, bang, and then we've got the CPI coming out today, and the Dixie looking like it potentially will pull back into those areas on the daily before moving back up. So I'm not suggesting major reversal, new all-time highs. I'm suggesting that I think that today's news later on will probably be more bullish than bearish, but whether you want to, you know, sell a kidney to put into a meme coin for that is completely up to you. I wouldn't suggest doing anything of the sort. I just think that we're looking at the eve of a green day, but you know, for the majority of today, waiting for that print to come out, it's probably going to be rocky and indecisive. Also, finally, looking at the S&P, going on to make new all-time highs constantly, continuously, loving life. There is only one simple drive of bearish divergence, but we're just basically just continuing on with this rally. S&P is over, SPX is not open yet. The futures market has, and it's already up, you know, 1 basis point. Either way, it tells us, it does tell a story that I don't see any real signs of major weakness on this chart. But that doesn't mean that a bad CPI, if I am wrong, will come through, and then this will sort of dump back down to perhaps maybe 5,130, that major support over there. Right, there's not much more to say about it than that. We do have to wait. We're at the mercy of the old men sitting around the table who are going to discuss and talk. One last little nugget I would say is that, you know, just looking at other central banks, ECB lowered rates, Bank of Canada lowered rates, and their economies are actually wrecked city compared to America's. Housing defaults in America are at a 13-year high, by the way, which means that there is some sort of secret discussion about whether lowering rates is a good idea just to help the housing market, because you just certainly don't need to help stocks, and they will be helped obviously with lower rates through just pure default, but through association with a lowered rate. So there is a chance, it's not a high chance, but there is a chance that the Fed will lower rates, maybe by 0.5 basis points, just for a laugh. But not obviously not for a laugh, but you know what I mean, just to do it. Everybody else is doing it, we can do it. You know, we deserve it. The housing market kind of might need it later on. Let's nip it in the bud. Let's try and stimulate that housing market. Let's keep the housing market up. We don't want too many defaults on mortgages, because that will create a supply shock, which might bring the house prices down. Well, it would do, and you don't want that, because everybody in power owns at least one house, I would imagine, probably a whole street, and the last thing they want is to see the housing market go down. Right, I'll leave it with you there. There's nothing much more to say, but thank you for watching. Hopefully you can subscribe to the channel if you feel like there's value here. Like the video at this exact point, because apparently the algorithm loves that. And leave a comment. A nice one I would prefer, but yeah, you are the master of your own keyboards. You can say whatever you want. I can't stop you. Thanks for watching. Have a nice day. Take it easy.